welcome to another episode of the Malaysian Economy Reality Check video series. In this episode, I'll be taking a look at the Employees Provident Fund, the Malaysian pension fund. That is basically something that the government handles, and all employers pay a part of the salary basically to this fund, and that fund is then used to pay out to pensioners the pension allotment. So basically I'm going to be looking at the balance of the fund year on year and sort of see where the trend is going, and I'll be doing this as before, looking at both the ringgit values and also the adjusted ringgit values, and finally the value in gold. So the data for this presentation is coming from the EPF homepage, the annual reports. Just click here and I'll show you. So here you have all the annual reports for these years. So that's the data that I'll be using, and it's basically the net total assets of each report that you'll see here in the table. So that should be straightforward, but actually I found two things that were a bit weird, which is that in the 2003 annual report, the balance as at January 1 is 200 billion. But if we look at the 2002 report and the end of year in December, it says 206 billion. So somehow there's 6 billion missing between the last of December and 1st of January. How that works out accounting-wise, I have no idea. Malaysia boleh. But there you go. And there's another discrepancy in the 2006 report, which states that the previous year-end balance was 263,459,050. But if we look at the end of the year for that report, the numbers don't quite add up. I mean, it's not like 6 billion missing. It's just that it doesn't add up. So I thought I'd mention that. So anyway, these are the reported values, the net asset of the EPF for the years. So we'll just plot that and we get a nice graph, and you can see the total value in ringgit is going up over time. And that's basically what we've seen in all the other videos as well. So let's take a look at the inflation adjusted graphs and also take this valued in gold and see what happens. And as you can already see, it's pretty bad. So the inflation adjustment, just as in the previous videos, I'll be taking the original numbers and I'll be multiplying with the inflation adjustment factor, which I get from this inflation sheet, where I calculate the value of the 1 ringgit in 2000 and then adjust the value of that ringgit as the currency supply is inflating. So that's the multiplier that I'll be using to get the inflation adjusted value of the EPF. And then I'm also taking the same number, so B7 in this case, and I'll be multiplying it by 1,000, because this is in thousands of ringgit, and then take it times the amount of gold that you get per ringgit. And if you remember from the first video, that's what I calculated down here. How many gold troy ounces do you get per ringgit per year for the different years? And there's no inflation adjustment here. This is just taking the prices of the gold on these different years. And we see here that you get less and less and less gold for your ringgit, basically. So going back to the EPF. So the value in terms of gold basically starts at 173 million ounces, and it goes all the way down to 98 million ounces. So the value of the fund over the past decade has gone down quite substantially. It's not half, but it's getting there. And as you can see, both the inflation adjusted line and the the value of the EPF in gold follows each other. So I would argue that my hypothesis that inflation should be adjusted in this way by doing the currency supply adjustment based on M3 is the correct way to look at it. But either way you want to look at it, if you want to look at the inflation adjusted value or the gold value, you can see that the total value of the EPF fund is going down quite drastically. Take note that this doesn't start at zero, but the trend is downwards. So at some point it might get tricky. As prices go up, as the ringgit inflates, it might get tricky for the fund to actually pay out to pensioners. And if this continues, the fund is basically going to die. So in 50 years or maybe in even shorter, we might simply not get any pension funds from EPF in any case. So to conclude that, in terms of inflation adjusted ringgit, the value of the fund is stagnant and slightly dropping if we take this endpoint here in 2011, yeah. But in gold terms, you can definitely see that the trend is downwards. The value of the fund is basically crashing. So that's the reality check on the EPF, the Malaysian EPF, the pension fund. And I thank you for watching, and I'll see you next time.